Why is health insurance just so confusing? Well, as health insurance brokers, it's a question we get asked a lot. So we're going to try to simplify things as best as possible in today's video. Specifically, we're going to be talking about marketplace insurance plans. But this is a multi-part series, so do make sure to subscribe to stay up to date. And of course, please make sure to click that thumbs up button, give us a like so that we can get this information out there. Now, as always, if you have questions about your health insurance marketplace plans or otherwise, please feel free to reach us at the number on the screen. And of course, you can always leave us a comment in the comments below, and we will be more than happy to answer any and all of your healthcare related questions. Okay, so today we're going to be talking specifically about marketplace insurance plans. So let's start with plan types. Now, like any other type of health insurance, there are different types of plans that you can choose from on healthcare.gov. There are HMOs, EPOs, and sometimes there are PPOs. So what is the difference? What do these mean? And how do you pick what's right for you? Well, let's start with HMOs. So HMOs, generally speaking, will have the lowest monthly premium, but the least amount of flexibility. You'll have to have a PCP, which is a primary care physician. You'll need referrals for specialists, and you will only have coverage in network. So it might be right for you if you're willing to give up that flexibility and maybe a little bit of control over your healthcare in return for some savings on your monthly premiums. Now let's switch to the other end of the spectrum and talk about PPOs. So PPOs will offer you the most flexibility with, generally speaking, higher monthly premiums. So you don't have to have a primary care physician, you don't need referrals for specialists, and you can receive care in and out of network. This may sound like a great option, but they can be a little bit difficult to find in marketplace plans. So if you've searched and scoured and there are no PPOs available to you and it's really, really important, you may want to look into private insurance, specifically perhaps a short-term medical insurance plan. Those can offer you nationwide PPO coverage. And then there are EPOs, which are the middle ground. They're somewhere in between PPOs and HMOs. So the premiums might be a little bit higher than an HMO, a little bit lower than a PPO. You'll have more flexibility than an HMO, but less than a PPO. Generally speaking, you don't have to have a PCP or require referral for specialists, but you will only have coverage in network. Now, just as a side note, in the case of a true medical emergency, please head to your nearest hospital. You will still be able to receive care even if that hospital is out of network in a true medical emergency. Now let's talk about metal tiers. So this is where a lot of people can get confused with marketplace plans. There are 4 metal tiers. There is bronze, silver, gold, and platinum. And despite what the names may imply, they actually have nothing to do with the networks or benefits offered by these types of plans. It really only breaks down to the cost share. So what I mean by this is your coinsurance. When you have to pay coinsurance, that means you're responsible for a percentage of the cost of a service or product, and your insurance carrier will pay the remaining percentage. So with these metal tiers, that really annotates what the cost share is under general terms. So generally speaking, bronze has a 60-40 split, with your insurance carrier paying 60 and you paying 40. Silver is a 70-30, with your insurance carrier paying 70 and you paying 30. Gold is an 80-20 split, and platinum is a 90-10 split. Now, of course, we are speaking in general terms in this video, so to add to that, generally, you will notice that bronze plans tend to have lower monthly premiums, and as you move towards the platinum plans, those monthly premiums do tend to increase. Now, regardless of which plan you choose, all plans for purchase on healthcare.gov must offer the 10 essential benefits. So the 10 essential benefits as listed on healthcare.gov are ambulatory services, emergency services, hospitalization, pregnancy and newborn care, mental health and substance abuse services, prescription drugs, rehabilitative and habilitative services, lab work, preventative and wellness visits, and of course, pediatric care. Now, plans can, of course, choose to offer additional benefits to compete for their beneficiaries' business. Additionally, there are many services that are offered at absolutely no charge, even prior to meeting your deductible. However, when you're comparing plans, you do want to take a look and see what the costs of those services might be if those services and products do actually have a cost associated. So you're going to want to look at the coinsurance and copays when you're comparing the different insurance plans. Now, while we're talking about costs, there are 4 main figures that I want you to take into consideration. You want to look at monthly premiums, deductibles, copays and coinsurance, and out-of-pocket maximums. Your monthly premium is what you'll pay on a monthly basis to keep your insurance active. Now, you may be eligible for a premium tax credit dependent upon your household income and your household size. So healthcare.gov or your state's individual marketplace will ask you to estimate your MAGI, or Modified Adjusted Gross Income, for the upcoming year. Now, based on that information and your household size, you may be eligible for a premium tax credit. And if that's the case, you will see a discount reflected on your premiums when you're comparing different plans. Now, it is very important that you try to estimate as accurately as possible. And yes, we know that can be difficult dependent upon your specific job. However, it is important that you estimate as accurately as possible. If you overestimate, it's likely that you'll end up receiving a larger refund when you file your taxes. However, if you underestimate, you might have a rather large bill when you pay your taxes. So if there are any changes in your household size or income, please make sure to update your information on healthcare.gov. Then there's your deductible. Your deductible is the amount that you have to pay out of pocket before your insurance begins to contribute to the cost share. Now remember, there are many services that are covered even prior to meeting your deductible. Very often there is an inverse relationship between deductibles and premiums. So you may notice that plans that have higher monthly premiums tend to have lower deductibles, and plans that have lower monthly premiums tend to have higher deductibles. Of course, this is not a hard and fast rule, but it is a pattern that you may notice. If you're someone with more extensive medical needs, you may benefit from purchasing a plan with a lower deductible, even if it has a slightly higher monthly premium. But if you're somebody who plans to take advantage of just the more basic services, then you might want to look into one of those high deductible health plans. And remember, if you're interested in a health savings account, which is an HSA, those are only available with high deductible health plans, or HDHPs. But not all high deductible health plans will offer HSAs. Now, we've already touched upon coinsurance. That is the percentage of the cost that you are responsible for. So that is not a fixed or set amount. Copays, on the other hand, are a fixed or set amount. So they're much easier to understand and much easier to compare when you're comparing different plans. And finally, there is the out-of-pocket maximum. This is basically a financial threshold or cap for your yearly healthcare spending. So your health plan is keeping track of your spending throughout the year, and once you hit this financial cap, your insurance carrier would take on the remainder of the in-network bills. Basically, it's designed to help protect you from major medical spending. Finally, let's talk about enrollment. So open enrollment is every year from November 1st to January 15th. However, it may vary slightly dependent upon your state, so make sure to check out healthcare.gov, and if your state uses their own individual marketplace, you'll be redirected and you can find more information there. During this time, you have several ways in which you can enroll. You can, of course, use healthcare.gov and enroll via the website. You can even call if you prefer that, or you can work with an agent of the carrier or a broker. You're not going to pay more or less regardless of which option you choose. So do bear that in mind. The only thing I would add is that some brokers charge an additional fee for their services. However, many do not. And the benefit, of course, of working with a broker is that they'll be able to compare multiple different plans and carriers, as opposed to an agent who can really only present you with their carrier's options. So remember that throughout open enrollment. And then, of course, outside of open enrollment, you may be eligible for a special enrollment period. Now, there is a full list of qualifying life events on healthcare.gov, but basically it boils down to 3 categories: change in household size, change in location, or loss of insurance. So make sure to check out healthcare.gov for the full list. I hope this video has made marketplace insurance just a little bit less confusing, and if it has, make sure to click that like button, give us a thumbs up so we can spread the information, and as I said earlier, do make sure to subscribe because this is going to be a multi-part series. If, however, you still have questions, you can reach us in the comments below, and you can always give us a call on the number on the screen. We are licensed health insurance brokers, and we do not charge an additional fee for our services, so we are more than happy to help, and we are licensed nationwide. Thank you so much for watching and have a wonderful day. Bye-bye.